Yo, hope you guys are well, having a great trading week. This video is going to be me just going through a few trade setups on NASDAQ and Eurodollar. Those are the two things that I trade. Why it's done this certain movement here, so why is it ran to the upside? Euro had a nice short today, and NASDAQ was a nice short yesterday. So I'm going to go through them three trades today. And yeah, there's basically just me journaling, talking through everything, and yeah, so we'll get straight to it. So price here, trading into this weekly opening gap. If you don't know what the weekly opening gap is, then you just watch RCT's videos. But it's basically they close on Friday, they open on Sunday. So trading inside that Monday, coming into Tuesday, it's still like just being very high resistance liquidity. Knife 8 opens, runs lower, takes out the sell side, right? So sell side there and there. So people who, as soon as knife 8 opens, people think it's going to go short here. They're trying to just catch this move lower. This is all getting manipulated. If you look to the left, why is price bounce from here? Well, if you look to the left right here, these candles here come straight to my eye. Why are these candles? Well, it drops lower and then it changes its state into delivery to run to the upside, right? So that's a change in state delivery, so it's a bullish order block. Inside the bullish order block is that there. A BISSY. You get the midpoint on the BISSY. So BISSY is buy-side imbalance, sell-side inefficiency. Midpoint here, consequent encouragement. Taps that to the T, so that's another like confirmation that price wants to go higher. So we've had sell-side taken, buy-side imbalance, sell-side efficiency respected to the midpoint. We've had a bullish order block, and we also had a weekly opening gap get respected. Here, you can see. That's 4 reasons why price potentially wants to start running up to take out this buy side here, and all this people. So all the people who shorted from here. Let's just remove this. So if you're shorted from here, where would you put your stops? So first you'll put your stops just above here, then there, then there, then there, or there. So that's where the market is going to be targeting, right? So you can see, been taken out there. Next target would be this inefficiency here, then that buy side there. So straight away, I draw from the low, and I could draw it from there, so to get the premium discount, but I would probably just draw it from here, this high right here, because one, I just want to always just get the lowest fruit from the tree. I'm happy with just getting the lowest fruit from the tree at the minute. There's a civvy just up here, which is just above the buy side imbalance, sell side inefficiency. Sorry, buy side liquidity. So that could be another strong indicator that price wants to reach up there and just feel this imbalance here. Let me just remove that. I don't know why it starts in purple anyway. So that would be my strong draw liquidity here. That'd be pretty much my final target. So I'll draw from this low to this high here. And then we get, I think it's this one here. Okay. Anywhere below this box here, or you can picture a box, is called the discount. So you want to buy at a discount. You don't really want to buy at a premium price, you want to buy at discounted prices. So anywhere in this, below this line here, is where I'm only buying. So as soon as price closes, so I'd wait, I see this confirmation here, that candle, that's a nice candle, right? However, it's still in the midpoint, and it's still the weekly opening gap, and it's below the midpoint. I'd wait for it to close, so that candle there, I like that candle as well. So anywhere trading above the weekly opening gap midpoint is where I'm looking for long. Still inside the discount as well. So let's just roll back here. Seeing this confirmation here, then this, you can just get into any, like, however you got the guys like to trade. Fair value gap, enter, silver bullet, 10 o'clock, bang. You can get in there, depending on how you guys like to trade. But I like to trade using 1 minute bullish order blocks. So something like this. And then I'll go into the seconds time frame. And then I want to find a breaker. So low, high, low, low, high, high, breaker, fair value gap here, entry there, full run, Or again, if I've missed this run here, then go into this order block here and just wait again for a nice breaker on the second time frame. So let me see if there is a nice breaker. That's nice there. Low, high, low, low, high, high. Breaker, Fair Valley Gap. There was really nice. Right there, 10-10 macro. That'll be nice, and I'm pretty sure it does respect it. It's going to just keep on the 15. There you go there. And it trades up higher from this run here using this bullish order block. And then my first target would be these highs here. And then second target there, or final target there, depending on how many contracts you do. So that was the first trade. That was today's. I'm going to go and show you Euro. Euro had a nice short today. Okay, so with Euro, I trade it differently. I don't use the 15 and 5. I use the 4 hour and 1 hour. I know, sounds confusing. But yeah, so on hourly. So we've got trend here. This is where I'll be looking at. So it trades up higher, takes out buy side, right? This is minor buy side. So it's taking out minor buy side liquidity. What's these two candles here? Bearish order block. Draw that across. So buy side, bearish order block. And what's inside here? CB. Midpoint. Midpoint there. So it's rejected midpoint, it's taken buy side, it's rejected bearish order block. Also, this wick here, wicks equals what? Gaps. It's rejected the gap. So I want to just see, wait for a confirmation candle, which is that candle right there. That lovely candle at 7 o'clock. So it's 7 o'clock is when I see that candle, right? Going to the 5 minute now. Where's 7 o'clock? Right here. Okay. Going to the 5 minute time frame to then find the bearish order block. Before that, you want to find the drawn liquidity, which is there. So you draw from there down to there. Get the levels. What's this here? Inside the premium. So it's bearish order block. Draw that across. Now, obviously price traded into that. It's gone the 1. And I just want to wait for a breaker. Here, so price trade away into that. High, low, high, high. There. Lower, low. These two candles become a breaker once that low gets taken. You use the first Fair Valley Gap because price may leave that as a breakaway gap, and if it does, then it would absolutely melt down. So it's there, that's my entry. Stops, you can have it tight or you can have it there, that's completely fine. There. First profit take partials probably would be there. But yeah, we'll be targeting this low here. That's the final target. Let's see if we get tapped in. Get tapped in. That's why you have to have your stop above this Fair Valley Gap. There. So what? I was in 1 minute, 2 minutes of drawdown. And it's absolutely rammed through it. What time is that? A macro. There. 750 macro run on liquidity. It's crazy how many times this happens inside the macro. So that was your target there. So that was the trade. So that was today's trade. And I'm just going to go through one more trade, which was yesterday, which was NASDAQ. So it was yesterday. Where is it? Here. Right. So we trade up higher. Okay. Trade up higher. Taking out buy side here, right? Buy side's been taken. Also minor buy side's been taken here. What's this here? SIBI. Okay, so SIBI, buy side. These two candles here, bearish order block. Happens on every single time frame. So this one I'm using the 5 minute, the euro I was using an hour. Obviously the hour is just going to take a lot longer. Hence why I've actually moved down to NASDAQ using the 5 and the 15. So we've had buy side taken, bearish order block, SIBI. Now I've just got to be patient and wait for bearish candle. There we go. Okay. So bearish candle, make sure that it's closed below the 25%, which it just about has. Maybe leave it one more candle, depending. So what time is that? 9:05, so which is 9:10. That's nice there. Draw that across, wait for us to trade into that. If it does, if it doesn't, then it's just a mistrade. Trades into that, go into the 5 second. Okay, so now that's looking very just sloppy here. So I'll do high, or you can go low, high, or sorry, high, low, high, high. Wait for this low to get taken there for your breaker, unless it just creates something else. If it makes a low, high, if that makes a high, high, then low, low, that would be a nice breaker. If not, then we have to wait for this low to get taken here. There we go. I did also forget to show you guys where the draw liquidity is, but I will in 1 second. So once this low gets taken, then these 4 candles, 5 candles get made into a breaker. Is there a fair value gap inside the breaker? There. Always want to do the closest one. Don't get too greedy. There's a fair value gap here, and it's still inside the breaker. So you have to make sure that your stop is above that. So it could be above there or above there, depending on what sort of trader you are. Where the draw liquidity would be. So let's go on to the 5 quickly. That low right there. That would be my final draw liquidity. So from here to there, it's easily inside a premium. There. Easy inside the premium, so you don't even need to worry. So let's go back into the 5 seconds. Okay, we got tapped into midpoint. That's another confirmation. Price trend lower. Potentially that would be targets there. That first target. First target's taken. Look at that there, inefficiency right there. Second target is there. Stops would have been moved to break even. And then final target's been taken there. You can also keep holding that if you wanted to, because if you go to the regular trading hours, it's done that there. Anyway, let me show you quickly. If you guys are still here into the video, then you're proper, like you want to get good at trading. This is another thing. So where's regular trading hours? There. Where's Monday? Here. Okay. So he's trading here. Yeah? This is the close of the Friday, and this is the open on the Monday. So we gapped up. Right, we gapped up. you get the midpoint. Let me just change the color of the midpoint quickly to orange. So we were trading around about 9:35, I think it was. Let's go into electronic trading hours. Got to do that again. Bear with me, guys. About here. So 9:30. Wait for the 9:30 here. So 9:30 is opened. Okay, so we're in this trade at the minute. That was my target. My next target would be the midpoint of the gap up. Right. So this is the gap here. This pink box. I'll change its color to blue. I'll actually make it a bit more obvious. Not as obvious, but anyway. This is the whole gap up. 70% of the time, the market runs back into the midpoint of the gap. So that's another strong draw liquidity. So we short up here, right? That was our final target, or your final target could be that. There. And there we go. And then obviously that's like a couple hours later. But yeah, I hope you guys enjoyed. Again, shout out to ICT. And I'll be making a lot more of these videos because I was making some different content, but it just wasn't really working. It was getting quite complicated. So I'm going to stick to just journaling and just posting pretty much every day, even if there's not many trade setups or if there's no trade at all. But yeah, hope you guys enjoyed. Leave a like, subscribe, shout out to ICT, and I'll see you on the next one. Be safe.